China stocks are rising after the country's latest stimulus push. For more, bringing in KraneShares CIO Brendan Ahern. Brendan, we're sort of trying to understand and contextualize this announcement versus many of the other stimulus announcements that we've heard out of China. So help us do that. How are you thinking about what might be different this time or not?
Well, one is, who did this message come from? And it came from a Politburo statement release. So this is really almost like the highest echelon of the Chinese government. This would almost be like the president's White House cabinet. So the release itself was from a meeting presided over by President Xi himself. And so one is just who it came from. The second would be what was in this release that's maybe different from what we've seen in the past. One was that they used the term monetarily loose to describe monetary policy. That's the first time since 2011 that they used the term loose as opposed to stable. And then the other thing it mentioned in the release that got investors very excited is that they used the term proactive fiscal policy. So a lot of what we've seen in terms of policy support has been more geared to the housing market, local governments, the stock market, and housing. This was very, very specifically focused on domestic consumption, something that I think particularly foreign investors have been waiting for.
You know, when you look at how the rhetoric thus far has sort of translated or not, I saw an interesting chart today looking at spending, federal spending there in China, and that there hasn't really been a lot of change over the past few years. Here's the chart here, and it looks at spending plans through October in green, then what happens the rest of the year, and the sort of annual forecast from the government there. And this year, we haven't seen that sort of rest of year figure yet, but the past few years, they haven't even met their own forecasts here. So I guess the question is, how much more spending are we going to actually need to see some yield in the economy?
Yeah, I think we've got the China Economic Work Conference, which is really a big economic policy meeting taking place this Thursday and Friday. That meeting, we're not going to get specific GDP targets or how big of the fiscal deficit we're apt to see. That might not come until the the dual sessions in March. But I think what you're going to see is verbiage leading us to believe that the GDP target for 2025 will be around 5%, as well as that budget deficit expanded to 4%, as well as continued policy to supporting the housing market, the stock market, as well as potentially expanding some of the subsidies we've seen applied to auto and home appliances. That expanded as well. So the key is just that the super tanker is shifting. It doesn't shift on a dime. It can't do a 180, but certainly the trajectory of policy is becoming very supportive.
And so given that, Brendan, I'm just curious, big picture, when you look at the Chinese economy versus, say, 6 months ago, is it the same, or you see signs that no, it's picking up here?
Yeah, I think without question, you've seen things like the Citigroup China Economic Surprise Index increase pretty dramatically, really since we saw that September PBOC kind of policy bazooka released. We've also seen continued support. So again, I think it's this incremental pushing along of the economy. I think they've been hesitant to do the kind of free money, the proverbial helicopter money type kind of sugar high stimulus that they think could lead to higher inflation, greater debt, and more of a short-term boost. They're looking for more structural positives to kind of get the economy going, particularly this domestic consumption that's been quite tepid following even the release of zero COVID policy 2 years ago.
So Brendan, bottom line here, is this finally sort of the all clear signal for U.S. investors who have been waiting to see whether it's a good time to get into China?
I think that's a great question. I think ultimately the geopolitical has been the significant overhang on the space. Professional investors are very hesitant to allocate because they're afraid of like a news headline coming out. I think what's happening, what's going to force those investors back into the space is the continued performance that I think most investors would be surprised that KWEB is up almost 50% from its January lows. So you're starting to see this outperformance of Chinese equities, which I think was going to put a lot of kind of pressure on professional investors who have, low, no, uninvestable attitudes to Chinese equities, despite the compelling valuations as well as the policy support to get the economy going.